Okay, welcome everybody. I'm so glad to see you again today. I wanted to kind of cover a few things. We had our first webinar today for financial services professionals, and I followed up on some of that. I thought that went well. I wanted to answer a couple of questions directly, and so it'll be on here taped as well. I want to go over how we are going to use Trivesta, and then I want to make an announcement about some other things we're trying to do. So, as a group, I wanted us all to know my goal, just so everybody understands, my goal beyond just the Trivesta side, which obviously I would like us to be the largest sales organization in Trivesta. And again, it's not going to take much to do that, but it's going to position us to be in a very, very strong wealth opportunity because of the opportunity in front of us. In most of these kind of organizations, what you're really looking at is you're looking at climbing a big mountain like a Mount Everest. So you got to climb all the way up that mountain. And then when you get to the last little rungs, there's no availability. So you can't go that high. What we've got here is all we got to do is climb a small hill, not a mountain, just a hill. And once we're on the top of that hill, the hill will grow from the bottom, and we just need to rise up with the hill. So we're going to be positioned in the top of the hill. So we're not going to have to fight, scratch, climb over people, you know, that are already at the top. So it's a beautiful opportunity. And I'm not sure I've made that as clear. I know I speak to some of you more than others, and that's because some people are a little more active than others right now, and they basically spend more time with me. But I'm willing to spend time with everybody. So I want us to get to the top of that hill, and then I want to take the ride, all of us together. There's room. There's just dramatic room for us to have 12, 15 millionaires in the mix, okay? So I want everybody to reach that level. I really do. Now, some of us are in different cycles of life. You know, some of us are younger, some of us are older, but it makes no difference. The idea of becoming a millionaire earner, a true millionaire, making $1 million a year, the idea of doing that is not even so much for the dollars. I mean, in my sensibilities, it's for one, it's for the ability to say I did it, because that helps. You know, I write books, I do different things, and obviously that gives you a better credibility because you can say, hey, you know, I earn $1 million a year. But it's not so much about things for me. You know, some people, you know, it's more. You know, I like to refer to it as lifestyle or life experience. You know, so basically that's kind of the issue. So, you know, lifestyle is, you know, keeping up with the Joneses, and, you know, people like to, you know, have an impression, you know, like I always said, you know, you can own a Mercedes, you know, a Mercedes buyer is not always the same buyer for the same reason. You know, one buys it for life style. That's so they can say they're driving a Mercedes, and everyone looks at him and says, whoa, he's driving a Mercedes. And, you know, people tend to give you credibility. But other people, life experience. So they like to drive a Mercedes for the smoothness of the ride, the safety of the vehicle, what it can do for their family. So that's the difference between life experience and lifestyle. And it's different for everybody. Some people are lifestyle driven, some are life experience driven. I think that's important for you to know when you're selling to people too, who you've got in front of you. But so I do want to make an announcement about some things we're trying to do within the group at the end. And I wanted to basically go over some of the training that we constantly do so we can get this story for Trivesta down, okay? So let me go to the screen share here and pull up a little bit. Let's talk about a story, okay? Let's talk about telling a story. You know, the greatest way to sell is via telling stories. And that allows us to... hold on, folks, 1 second. I had somebody email me, want to come in the conference, so I wanted to give them the ID. Let me just put down zoom.us and 899. Join meeting. Don't mind me. Don't you love it when a plan comes together? Join meeting 803 803 809. We got a lot of eights in there, folks. So if you're playing the numbers, we got a lot of eights. 899 803 809. Okay, there it is. So hopefully they'll be able to join in. All right, so really what we want to talk to people about, I think, which fits into everything else we do, is financial independence. Recently I've seen so much material out there now in our journals, in our, what we sell, our insurance journals and all the magazines, people starting to talk about financial independence. But my point to people is, do you really have a chance? And that's what we're really talking about, because of the fact that these numbers have not changed in decades. So this is really the story we got. Most of you who have been around the life insurance industry for a while, you've heard the 100-man story, and you've been around long enough to know it hasn't changed. I mean, I had over 35 years plus experience, and the story's never changed. So there's something drastically wrong if that story doesn't change. So really what we've got there is this story of the 95 and 5%, okay? Now, what we really want people to do is, for your side of it, we want to get the 3 free for the referrals. We want to create the additional sales that the referrals are going to bring, plus the life sale that's going to go back to the person who got the 3 free. Okay, that's the cross sell. And then we want to recruit. And in our cycle, I think we all want to recruit agents. Now, we can recruit regular people, so you don't have to worry about that. You can certainly recruit housewives and bakers and candlestick makers and everybody else. And that's great if you know who it is you're recruiting. Don't waste time just recruiting everybody and throwing them off the wall, because what will happen is you'll end up with people who, some will, some won't, some do, some don't. And you don't want to spend time herding cats, okay? So really what we want to share with agents is this lifetime client value. They don't really, most of us in this industry have never been taught or think in terms of the lifetime value of a client. Retailers do in their business. You go to a little bookshop in the corner, most of them are running successful bookshops, know the lifetime value of a client, a customer. Okay, you go to any of the major shopping stores, the Targets, they got the numbers and the lifetime value of a customer. They know these things. So it's no different in our arena. So we're really telling people this story of a life. It's kind of the same story. And the sad facts of it. People, almost everyone work. Now, that work comes in different formats. Some people are employees directly. Some people are hourly employees. Some people are, contracted employees. They get a salary. Some people are business owners. Some people are, I use the term entrepreneur because so few are, but entrepreneurs are way different than a business owner. Most business owners today are simply people who've created an employment opportunity for themselves. So they're now an employee in their own business. That's really not a great place to be. Most of our insurance agencies that we know of, those are positioned that way, where people have just basically made themselves a 1099 employee. Okay, so instead of a 1090, so they made themselves a 1099, so they're independent, but they're still an employee. So people, anyway, they work, they earn, they spend. We'll talk a little bit about that. They borrow, and then they pay off the borrow. Now, the spending side is today's dollars. They spend what they have right now, but when they borrow, they're taking dollars from tomorrow. They're taking dollars from the future. They are forwarding those dollars that are not earned yet. Those are unearned dollars. This is just like the government, when they have the unfunded benefits. Okay, so these are unearned dollars that are now placed in a person's hands. They're really their dollars. They're not the bank's dollars. It's theirs. Okay, they had the collateral, or they had the credit record. They brought it forward, so it's all brought forward. And now in the future, they pay interest on those dollars. The interest payments over a lifetime of the scheduled payments would be a loss, because if they follow the full 30-year amortization, they lose a lot of money. If they follow the full 4 years on a car loan, they lose a lot of money. 6 years on a car loan. If they follow 10 years on a student loan, they lose a lot of money. They're built this way. They're built with the amortization cycles that make a huge amount of money for the banks and the lenders. So if they can shorten the cycle of the amortization, those dollars that are not lost are actually savings. And again, they're not savings today, they're savings in the future. So really what you're trying to get people to understand briefly is simply they're losing money. And then they need to understand that, look, 95% of the people in our society who reach age 65 or later and are fortunate enough to get to the fourth quarter of life, they end up there in the fourth quarter of life dead broke, or financially dependent. That's just the realities. Only 5% reach financial independence. This hasn't changed in decades. So really, what we're trying to share with people is we want to show them how to become part of the 5%. And everything you do in your business correlates to this. So the life insurance, the annuities, the retirement planning, that's all pieces of this. But without the first step, without stopping the loss of dollars, all those other things that you bring to the table are not going to move people out of the 95%. So what we really want people to understand is the work, earn, spend, borrow, pay, and we want to get them to the point where they stop losing money so those future dollars can be compound interest for them, and they can use those future dollars so the money earns money. That's how the 5% become who they are. They accumulate money. Money starts to work for them. Okay, let's understand that concept. The 95% never get money to work for them, ever. That's why they're in the 95%. They compound losses. They never compound interest on their side. They compound losses. And they're helping the banks. They're helping the credit card companies, all the merchants. They are allowing them to compound the dollars from themselves and make money for the banks and all these other places. Now, the banks deserve to make money. The merchants deserve to make money, but within reason. There's no reason to give them more. Okay? So, in essence, the work, earn, spend, borrow, pay is a losing proposition, and it just compounds the losses. And all we're trying to help people do is stop compounding their losses. Hopefully that makes sense for everybody, okay? So if you look at this road to financial independence, let's start that road, and at a certain point, everyone's going down the road, and then it's going to split. It's going to split at 65. But down that road, while people are on it, they all have the same things. They got the risk management protection. They got their investments. They got annuities. They got distribution of dollars. All that's been done for them. But yet, 95%, with all that, they still end up taking the right turn into financial dependence at best. That's best, okay? And at worst, in the financial dependence side, at worst, they're dependent only on the government. Now, on the left turn, on the left side, the 5%, they move into financial independence. They have all those other things. But the doorway you see there, that first step is really where Prospeo comes in. Because Prospeo is going to stop the loss of those dollars. That's really all we're telling people. We want to stop the loss of those dollars. Okay, you see here, the spending is today's dollars. Look at all those things people spend money on. You know, entertainment, their home, their car, right? Food, eating out, electric, power, clothes, you know, all the things you need in life, okay? So they spend on those things. Now, on the other side, what else comes up for them? Unknown and emergencies, health, all these other things, these outflow. But that's still an outflow of cash. But it's cash they don't have, because where do they go? Ultimately, to get that cash when the emergency comes up, right? They go to the credit cards. They go to the loans. And they continue to lose the future dollars because they brought them forward. So really, our role in this is to help them stop. So basically, you're opening the door to stop the bleeding, funnel the money back into their future through money management. And that's what Prospero does. Now, I don't want you getting in the weeds on this. I don't want you having to sell this, okay? I don't want you to keep coming into the point where you're trying to sell it yourself. Don't get yourself into that cycle, okay? That's the beautiful thing. That's why we've got the Tuesday night, the Thursday night, and the Saturday morning webinars. Now, Tim Taylor and Joe Cherry, they know the Trivesta membership inside out. They can sell it. So the best thing to do is allow them to sell it. The only thing that we want to do, okay, in our cycle is, one, we want to get paid when they sell it. That's great. Okay, that's great for us. But we want to follow up, because the follow-up is where we get to build the referrals, the relationship, and sell all the other products, because you can. So now all those other products become they become the process of a cross-sell or an upsell. They are no longer a direct sale, so to speak, because the need has already been created. So you don't have to invent the need. You know how some of those sales training, oh, create the need. Come on. The need's either there or it's not there. What you got to create is the interest and the desire to understand what the problem is. That's what you need to create, okay? And then the need takes care of itself. So we've got a formula where one sale is going to create this incredible amount of referrals, because if they get 3 people around them, they get it for free. That conversation, whether it's on the telephone, whether it's like us talking right now, whether it's in a webinar, whether it's in a group setting, whether it's face-to-face, whatever, that conversation is simply, hey, you made a great decision today in stopping the losses in your future, which is going to help you accumulate quite a bit of money, and at the same time, it's going to take you into financial independence, into that 5%. But let me ask you, if I could eliminate the payment that you're making for Prospero that's going to do all those wonderful things for you, would you be interested? That's it. That's the question. So they're going to be interested. Why? They're going to be interested because they're going to save money. They're going to be interested not because you're a good person, not because you're a wonderful presenter, not because you did a great job for them, not because you're their brother-in-law, their uncle, or whatever. You're not going to get the referrals for that reason. You're going to get the referrals for the age-old, oldest reason in the world. You're paying people for the referrals. That's it. Okay? And that's what they respond to. They're saving $100 a month for the next 12 months, 24 months, 36 months, 5 years, whatever it is. They're saving all that money. Okay? So certainly they'd be willing to give you 10 referrals. Now, when you get to the referral speech, you just got to preface it, because you know how people are. Make it easy for them. Say, look, I need the names and numbers and emails of 10 people that you know, 10. Studies have shown that you know 250 people. I'm only asking for 10. So I want you to give me the names, numbers. Don't judge them. Don't prejudge them. Don't worry. And all I'm going to do is the same thing I did with you. I'm going to have them watch the testimonials just like you did. I'm going to have them do the calculator just like you did. And I'm going to have them go to a webinar just like you did. And when they make the same decision you made, I'm going to have 3 of them. Yours is free. Now, when you get those 3, you got 10 times 3 is 30. You need 9 sales, right? Because you need 3 more sales in each of those buckets. Now you got 90. 9 times 10 is 90. Now you need 27 sales, okay? And then so on and so on and so on. The referral chain is there. Whether you believe it to be true or not, the referral chain is there. Now the question is, will you use it? Will you do it? Now, I'm not asking you to do anything I wouldn't do or not doing, okay? Now, I'm not selling insurance directly anymore, so I'm not directly competing with you on insurance sales, okay? I know that if I went back into insurance production, that this is the way I would do it. I promise you this is the way I would do it. So with that being said, I have gotten a little bit of an itch in my own life again through some of the people in our group and some of the people I've got to speak with. So as I promised, and I will always do this, my promise is good to this, okay? I built the Advocacy Network before I used the Trivesta membership. Before that, I built the Advocacy Network with something in mind called Financial Concierge. That was for an insurance agent, a financial services professional, to become the key person, the quarterback, so to speak, in the life of every client they had. You know, and I wanted that to be, again, due to the laws of keeping clients, you know, persistency, right, and retention, and also due to the laws of prospecting and getting other people. So everything that I built over the years has to do with getting more people, serving more people, and earning more money. Because Earl Nightingale in Lead the Field I learned many, many decades ago that if you want to earn more money, you need to provide more service. It really is that simple, okay? Anything else they tell you is a myth. You want more money, create more service, okay? Now, we live in a wonderful environment. We live in a wonderful industry because guess what? With financial decisions, we can create all kinds of solutions and provide service. So why not provide service where people have 5, 6, 7 different services from you inside their financial decision-making process, which positions you as the key person to go to. Now, whether you do this with businesses or you do this with individuals or you do it with a combination of both, makes no difference. Okay, so through advocacy, I created strategic alliances where I wanted to have the availability for everything that we could do with a client. I'll tell you a little story about that. Before I went into the Trivesta model, which I now find to be still part of it, but prior to that, I used to charge agents to be with me in the concierge program. Now I'm basically giving the program out without charging, okay? Because the Trivesta, is the positioning. I had an agent, middle of the country, had a client with about $250,000 available. And initially, he was going to do the usual. He was just going to go there and plug it into an annuity. One big annuity sale, 8%, bang, there it is. So I showed him what we do at Retireless, and I told him how to make a presentation. And I said I would do it for him if he wanted me to, but I told him how to make the presentation and basically go over 3 things: tax-free income, tax advantage cash flow, and future purchasing power. Now, those 3 things lead to 3 distinctly different sales. And at the end, he was able to create for himself 2 times more commission, but he did a much better job for the clients. And sometimes you get 5%, 10% less commission, but you still got 2, 3, 4 lines of business in the house, which means you're going to retain that client forever and ever, turn into a higher customer value, the lifetime value. And at the same time, you're going to be there for every other thing that happens in their life. We've all been taught, I'm sure you have too, that used to be the old story, and I don't know if it still is, but in my era, when we started in the insurance industry, it was a 7-year cycle. It was something like every 7 years, you go back, you make another sale, right? Somewhere in that kind of cycle. But no one ever talked about multiple needs. Multiple needs being not just life insurance, but, some other financial solution like Prospeo. So now you got Prospeo, then you got life insurance, then you got annuities, then you got another life insurance. You may have a term conversion, all these kinds of things, ways to build a business. So what I'm trying to share with you is that these things in Retireless are this. In Retireless, tax-free income comes from what? It comes from life insurance. It comes from single premium. It comes from, a normal whole life, a normal structure. IULs can be built that way. I'm not a big fan, but, again, I don't think one size fits all. So everybody has a distinct need and it fits. So there's room for IUL. There's room for whole life. And there is room for term insurance, obviously, and then term conversions. But at the end of the day, tax-free income is a major advantage for having life insurance and build it that way. Tax advantage cash flow is owning a business. So we have relationships to sell franchises, some small, some large. We don't get about, I haven't sold a very large franchise, but I've sold some small ones. And in selling small ones, I picked up 15 grand, 25 grand. It was a pretty good payday, for a small franchise, and explaining to people the tax advantages and the tax advantage cash flow of owning a business. Even a retiree who could own a business and work a day a week, 2 days a week, but just keep themselves active. Because studies have shown that when you retire, if you stay active and you keep your hands in the business, you don't get stuck with some of the brutal health concerns. You don't get stuck with the Alzheimer's and some other issues because you're busy. And people who are not, who just retire and live a life of leisure and drink beer and hang out at the bar and play golf, they usually die sooner. So, so why not own a little business, have a tax advantage, and also be able to take your Social Security a little earlier because you can always hide all that income floating around a business. Third thing, future purchasing power, gold and silver. Real simple. 10% of your portfolio should be in gold and silver. Why? Not as an investment. Not the reasons they tell you on TV. Not because gold's going up, silver's going up. None of that. None of that. It's not speculative. It's a distinct insurance policy for future purchasing power. That's all. Okay, 1926, you could have bought a Ford. What would have been a moderate, upper level car from Ford. It would have cost you amazingly. It would have cost at that point in time, based on the price and the cost of gold, it would have cost you 32 ounces of gold. Today, you can buy a $37,000, $40,000 car, same level, same kind of thing, right? Nice car, and it costs you about 32 ounces of gold. Never changed. So it's purchasing power. That's all it is, and that's why 10% of your portfolio should be in purchasing power. The dollar is going down dramatically, and things are happening. You get out of dollar-based things, and you increase your gold and silver. Dollars going up. As long as you're not below 10%, as long as you're not above 20%, you stay in gold and silver forever. Okay. If you get too high or too low, you start to change. But anyway, you get paid on that. So bottom line, again, I'm just trying to share with you the fact that you can build a very nice client thing on that. So that's Retireless. But let me share with you, Jim. I've introduced some of you to Jim Ashley, Harbor Insurance. We're not going to proselytize. I'm not going to try to steal agents whatsoever. Jim and I are trying to build a hybrid, and it's going to be uniquely positioned. And I think it's going to be very attractive for insurance agents. We're really looking to, my side of it, I'm looking to build some younger people, because the industry, if I could leave any legacy, I'd like to leave a legacy that the industry survives. And if the industry continues going on the way it's going in recruiting, it won't survive. I know they hope that everything will get done digitally, but sooner or later, if they don't start recruiting some 20, 25, and 30-year-old candidates and keeping them, it's in trouble. So I wanted to get some younger, puppies in there and work on that. Jim has a totally independent side of that. We got a very unique carrier in there, National Life, 155-year-old company. And I wanted to take a company public. I talked to Jim about how we can do that. And basically, we would build this operation to consolidate and roll up some small, mid-size IMO FMOs who are going to be in serious hurt in the next couple of years. So the marketplace is going to be wide open. They're older, people running them. Some of them have no exit strategy whatsoever, except maybe they leave it to the family or something, and that's the case, that's fine. If not, they have no exit strategy. The DOL is going to cripple them. And the bigger ones are all being consolidated right now, to lower costs and lower expenses on the DOL. So it makes for a great opportunity. So a 3-year plan, we could roll out a nice little public company, and people could make a huge amount of return on that. And then in 7 years, we could have that public entity swept up by one of the bigger equity firms, who tends to buy the bigger ones. But we'd have to build the bigger one for them to build it. Anyway, so that's my game plan and goal, and that's what I'd like to do with everybody. And again, I don't want to interfere with any of the agents that we recruit. I don't want to interfere with where they sell or how they sell or what they want to do. I want to always be as I've always said, an addition to, never an instead of. I want to help everybody, but through Jim, through this relationship with National Life, and I spoke with a regional director that Jim was kind enough to introduce me to. Through this relationship, they have some very, very unique opportunities. For those of you who may want to build CPA tax referral kind of advantages. For those of you who are already with us, who are just simply on the CPA or tax side and haven't done anything yet on the life insurance side, we certainly have a wonderful program that's going to expand that for you and turn people in your practice into agents and collecting commissions and another stream of revenue. Okay, so it's never a bad thing to have multiple streams of revenue. Whenever you lock yourself into one stream of revenue, you are subject to the winds of fate, as they would call it. Okay, so good times and bad, you'll be subject to recession. You'll be subject to industry changes, regulatory changes, age changes, demographic changes. So you need multiple streams of income so you can avoid that. But in our world, multiple streams of income come from clients. One client, you could have 4 streams of income, 5, 6, and all based on one thing. Got to be selling hair products. Obviously, I'd probably be a big buyer. But you don't need to sell vitamins. You don't need to sell drinks. You don't need to sell weight loss. You don't need to do any of that. All you got to do is stay in a financial arena and do everything you do, plus a few other little additions like Prospeo. Okay, that's the point of Prospeo. Don't make this more complicated or confused than it needs to be. Okay, it's simply a way to stop losing money. If you get people to understand one simple concept, that they are losing money, that they don't know they're losing, and that because of that, they could never, ever become financially independent, that should be enough pain to get them to watch a couple of testimonials, to do a calculator, and to come to a webinar. You got to poke a little pain. Just say, hey, I don't know if you're aware or not, but only 5% of our population makes it financially independent at age 65. Were you aware of that? Sure. Well, I have an answer on how to get you to the 5%. Would you like to be in a 5% or you want to be in a 95%? I mean, the choice is yours. If you continue doing what you're doing right now, and I don't even know you, I promise you that you're going to fall into the 95% because that's just the way things are. Rarely do I run into somebody who's already in the 5%. And there's one major mistake that everyone makes who ends up in the 95%. One mistake. I can show you what that mistake is. I just need you to check on a website, and I need you to check out what some people say about it who've healed that mistake. Figure out what that mistake is going to mean to you by taking a calculator, doing a calculator, and then coming to a webinar to learn everything you need to know in a deep dive about it. I think that's the best way, okay? So with that for today, let me just let me go in here in the chat. Well, we got Q&A. Any questions? We got no open questions right now, so type away. Here's the time. I wish I could set Zoom up so that we could converse directly, but it doesn't seem to have that. I'm going to take the